Based on the historical data and forecast, Bitcoin shows a downtrend. The price has been consistently falling from June 9, 2025, to June 22, 2025, and the forecast for the next week indicates continued downward pressure. The RSI is consistently below 50, with recent values nearing oversold territory, around 38.9, suggesting a bearish momentum. The Bollinger Bands are also contracting, which often precedes a significant price move. Considering these factors, I recommend a short selling strategy. Specifically, I suggest entering a short position at $103,900 on June 23, 2025. The stop loss should be placed slightly above the upper Bollinger Band at $104,500 to protect against a potential short-term bounce. The initial target price is the support level of $96,800, offering a substantial profit margin. If the price continues to fall below the support, a second target could be set at $95,000. This strategy combines RSI oversold signals, Bollinger Band contraction, and trend analysis for a high probability, high reward trade. Based on the historical data and forecast, Ethereum shows a downtrend. The price has been consistently declining from June 9, 2025, to June 22, 2025, and the forecast for June 23, 2025, to June 29, 2025, suggests continued downward movement. The RSI indicates oversold conditions on several days, but the overall trend remains bearish. Considering the support price of $1,840 and the recent price action, I recommend a short position. Entry price will be $2,390. Set a stop-loss order at $2,450 to limit potential losses if the price unexpectedly reverses. The initial target price is $2,200, based on the forecast and the existing downtrend. To refine the strategy, I'll incorporate the Bollinger Bands. The price is currently approaching the lower band, which could indicate a potential bounce. However, given the overall bearish trend, I'll maintain the short position. If the price touches the lower Bollinger Band and shows signs of rejection, consider covering the short position at $2,350. If the price continues to fall, adjust the target price to $2,130, aligning with the forecast. This combined strategy leverages both RSI and Bollinger Bands to maximize potential returns while managing risk effectively. Based on the historical data and forecast, XRP shows a downtrend. The RSI consistently below 50, reaching a low of 35.2, indicates the asset is significantly oversold. The forecast predicts a further decline to $1.94. The Bollinger Bands also support this view, with the price consistently near the lower band, suggesting continued downward pressure. We will implement a strategy combining RSI and Bollinger Bands to capitalize on this trend. Our strategy involves a long position when the RSI falls below 20 and the price touches the lower Bollinger Band. Given the current oversold condition and the forecast, we will enter a long position at $1.94. The stop loss will be set just below the support level at $1.7 to protect against a potential breakdown. The initial target price will be the resistance level at $2.05, aiming for a quick profit. If the price reaches $2.05, we will move the stop loss to the entry price of $1.94 to secure the profit and potentially allow for further upside. This strategy combines the oversold signal from the RSI with the price proximity to the lower Bollinger Band to maximize profit potential while minimizing risk. Based on the historical data and forecast, BNB is currently in a downtrend, with a clear breakdown below previous support levels. The RSI consistently below 50, and nearing oversold territory around 33.4, suggests significant selling pressure. The forecast for the next 2 weeks projects further declines, reaching as low as $599. Considering these factors, my strategy is to implement a contrarian long position, anticipating a potential bounce from the support level of $607. The entry price will be $607, with a stop loss placed just below the support at $599 to limit potential losses. The initial target price will be $645, aligning with the previous resistance level, offering a substantial gain. To refine this strategy, I will incorporate the Bollinger Bands. When the price touches the lower band of $621, it indicates an oversold condition, strengthening the case for a potential rebound. Therefore, I will initiate a long position at $621, with a stop loss at $614 and a target price of $648. This approach combines RSI and Bollinger Band signals to enhance accuracy and risk management. The portfolio will prioritize the Bollinger Band strategy due to its higher probability of success in the current market conditions, aiming for a high return investment while carefully managing risk. Based on the historical data and forecast, Solana demonstrates a clear downtrend. The price has been consistently declining from June 9, 2025, reaching a low of $131 and forecasted to further decrease to $123 by June 29, 2025. The RSI consistently remains below 50, with readings dipping as low as 31.7, indicating oversold conditions. The Bollinger Bands also confirm this trend, with the price consistently trading near the lower band. Therefore, a short position is recommended. We will enter a short position at $131. The stop loss will be set at $133, just above the lower Bollinger Band to avoid being triggered by short-term volatility. The initial target price will be $127, aligning with the forecast price for June 28, 2025. To refine the strategy, we'll incorporate a trailing stop loss. Once the price reaches $127, we'll adjust the stop loss to $126. If the price continues to fall, we'll target $124 and adjust the stop loss to $123. This trailing stop loss approach allows us to secure profits while minimizing potential losses. The overall strategy combines technical indicators like RSI and Bollinger Bands with forecast data and support/resistance levels to create a robust shorting opportunity. This strategy aims for a high return by capitalizing on the established downtrend while managing risk through strategically placed stop-loss orders. Based on the historical data and forecast, TRON shows a downtrend with decreasing momentum. The RSI consistently stays below 80, indicating the asset is not overbought. The forecast predicts further decline, and the support price of 0.246 provides a potential floor. Considering these factors, I recommend a short position strategy. We will enter a short position at $0.271. The stop loss will be set just above the upper Bollinger Band at $0.289 to protect against a potential short-term reversal. The initial target price will be the support level of $0.246, aiming for a substantial profit. To enhance the strategy, we will incorporate a trailing stop-loss mechanism. Once the price reaches $0.264, we will adjust the stop-loss to $0.266. If the price continues to decline, we will adjust the stop-loss further, maintaining a buffer of $2 above the current price. The final target price will be $0.259, based on the forecast. This combined strategy leverages RSI, Bollinger Bands, and support levels to maximize potential gains while minimizing risk. Based on the historical data and forecast, Dogecoin demonstrates a clear downtrend. The price has been consistently declining from 0.195 to a forecast of 0.136. The RSI consistently remains below 50, indicating a bearish momentum, with values frequently dipping below 30, signaling oversold conditions. The Bollinger Bands are narrowing, suggesting increased volatility and potential for a significant price movement. Given these indicators, I recommend a short-selling strategy focusing on capitalizing on the continued downward trend. My recommended strategy involves entering a short position at 0.158 on June 23, 2025. The stop loss should be set at 0.162, just above the resistance level, to limit potential losses if the price unexpectedly reverses. The initial target price should be 0.142, aligning with the support level. If the price reaches 0.142, consider moving the stop loss to break even to protect profits. A second target price can be set at 0.136, based on the forecast data. This strategy combines trend analysis, RSI signals, and Bollinger Band volatility to maximize potential returns while managing risk. Based on the historical data and forecast, Cardano exhibits a clear downtrend. The price has been consistently declining from June 9, 2025, to June 22, 2025, and the forecast for June 23, 2025, to June 29, 2025, continues this downward trajectory. The RSI consistently remains below 50, indicating a bearish momentum. The Bollinger Bands are also widening, suggesting increased volatility and a potential for further price decline. Considering these factors, I recommend a short position strategy. Enter a short position at $0.57, with a stop loss placed at $0.578 to limit potential losses. The initial target price is $0.509, aligning with the forecast for June 28, 2025. To refine this strategy, we can incorporate RSI and Bollinger Band signals. When the RSI falls below 30, indicating an oversold condition, and the price touches the lower band of the Bollinger Bands, it could signal a potential bounce. However, given the prevailing downtrend, I prioritize the short position. If the price reaches $0.509, consider taking partial profits and adjusting the stop loss to break even. If the price fails to reach the target and starts to rebound, exit the position at $0.578 to prevent further losses. This approach balances the potential for high returns with risk management, capitalizing on the anticipated bearish momentum while safeguarding against unexpected reversals. Based on the historical data and forecast, Bitcoin Cash exhibits an overall upward trend, supported by consistently breaching the $463 resistance level and the forecast indicating prices hovering around $470 to $475. The RSI fluctuates between 55 and 70, suggesting periods of both buying and selling pressure, but generally above 50, indicating a bullish sentiment. The Bollinger Bands show price movement within a widening range, indicating increasing volatility. Considering these factors, I propose a long position strategy. We will enter a long position when the RSI falls below 50 and the price touches the support level of $438. The entry price will be $438. To manage risk, the stop loss will be set just below the support level at $435. The initial target price will be the recent resistance level of $463, providing a quick profit. To maximize potential gains, we will implement a trailing stop-loss strategy. Once the price reaches $463, we will move the stop-loss to $455. If the price continues to rise, we will adjust the stop-loss accordingly, ensuring a secure profit while allowing for further upside potential. The final target price will be the forecast price of $475. This strategy combines RSI signals, support and resistance levels, and Bollinger Bands analysis to identify optimal entry and exit points, aiming for high returns with managed risk. This portfolio is the most efficient of the three strategies. Based on the historical data and forecast, Sui shows a clear downtrend. The price has been consistently declining from June 9, 2025, to June 22, 2025, and the forecast for the next week predicts further decline. The RSI consistently remains below 50, indicating a bearish momentum, and has reached oversold levels in recent days. The Bollinger Bands also confirm this trend, with the price consistently trading near the lower band. Therefore, a short position strategy is recommended. We will enter a short position at $2.63, placing a stop-loss order at $2.83, just above the recent resistance level. The initial target price will be $2.37, aligning with the forecast for June 25, 2025. To refine this strategy, we will incorporate the RSI and Bollinger Bands. If the RSI reaches an oversold level of 20, we will consider tightening the stop-loss to $2.71. Conversely, if the price touches the upper Bollinger Band, it signals a potential trend reversal, and we will immediately close the position and take profits at $2.45. This dynamic adjustment ensures we capitalize on the downtrend while minimizing potential losses. The combined strategy, incorporating both trend analysis and technical indicators, offers a robust approach to maximizing returns in this bearish market. Based on the historical data and forecast, Decentraland exhibits a clear downtrend. The price has been consistently declining from 0.293 to 0.236, and the forecast projects further decline to $0.22. The RSI consistently remains below 50, indicating a bearish momentum. The Bollinger Bands are also contracting, suggesting decreasing volatility and confirming the downward trend. Considering these factors, I recommend a short selling strategy. Entry price will be $0.243, setting a stop loss at $0.25 to limit potential losses if the price unexpectedly reverses. The initial target price will be $0.23, aiming to capitalize on the anticipated downward movement. To refine the strategy, we will incorporate RSI and Bollinger Band signals. If the RSI dips below 30, oversold level, and the price touches the lower Bollinger Band, it might indicate a temporary pullback. In this scenario, we can cover our short position and re-enter when the RSI rises above 40 and the price approaches the upper Bollinger Band. If the price breaks above the resistance level of $0.257, it signals a potential trend reversal, and we will immediately close the short position and adjust the strategy. The second target price will be $0.225, aiming to capture further downward potential. This dynamic approach combines trend analysis with technical indicators to maximize returns while managing risk effectively. Based on the historical data and forecast, Quant exhibits a clear downtrend. The price has been consistently declining from $122 to $90.3, and the forecast indicates further downward movement, potentially reaching $83. The RSI consistently hovers below 80, and has been below 50 for most of the period, suggesting a weakening momentum. The Bollinger Bands are widening, indicating increased volatility and confirming the downtrend. Considering these factors, a short position strategy is recommended. The primary strategy is to short Quant at $91. The stop loss should be set at $94, just above the top of the Bollinger Band, to mitigate potential losses if the price unexpectedly reverses. The initial target price is $88, aligning with the forecast price and a reasonable profit margin. If the price continues to decline, the second target price can be set at $83, based on the forecast. This strategy combines technical indicators and future forecasts to maximize potential returns while managing risk. Based on the historical data and forecast, Arweave demonstrates a clear downtrend. The price has been consistently declining from June 9, 2025, to June 22, 2025, and the forecast for the next week indicates further downward pressure. The RSI consistently remains below 50, frequently entering oversold territory below 35, suggesting strong selling pressure. The Bollinger Bands also confirm this trend, with the price consistently near the lower band. Therefore, a short selling strategy is the most appropriate approach. I recommend entering a short position at $5.04, placing a stop-loss order at $5.61 to protect against unexpected upward movements, and setting a target price of $4.27, aligning with the forecast price and the established support level. To refine this strategy, we'll incorporate the RSI and Bollinger Bands indicators. When the RSI dips below 30, it signals an oversold condition, which could present a short selling opportunity. Simultaneously, if the price touches the lower Bollinger Band, it further confirms the downward trend. Combining these signals, I suggest entering a short position at $5.04. A stop loss should be placed at $5.37, slightly above the lower Bollinger Band, to allow for minor fluctuations. The initial target price should be $4.63, based on the forecast, but if the price breaks through the support level of $4.28, the target price should be adjusted to $4.27 for maximum profit. This combined strategy leverages both technical indicators and forecast data to optimize risk management and potential returns. Based on the historical data and forecast, Kava has been exhibiting a downtrend over the past 2 weeks, with the forecast indicating a continuation of this trend. The RSI consistently remains below 80, and dips below 40 on several occasions, suggesting the asset is often oversold but lacks strong upward momentum. The Bollinger Bands show periods of volatility, but the price has largely remained within the bands, with the lower band frequently tested. Considering these factors, I recommend a short selling strategy targeting a gradual decline. Our entry price will be $0.409, capitalizing on the recent forecast dip. A stop loss will be placed at $0.415 to mitigate potential losses if the price unexpectedly reverses. The initial target price will be $0.397, aligning with the forecast for June 25, 2025. If the price reaches this target, we will reevaluate the situation based on further technical indicators and market conditions. If the downtrend continues, we can adjust the target price downwards to $0.39. This strategy combines the RSI signal of potential oversold conditions with the Bollinger Bands indicating a range-bound movement and the forecast suggesting a downward trajectory. Based on the historical data and forecast, POL-Xmatic is exhibiting a clear downtrend. The price has been consistently declining from 0.219 to 0.172 over the past 2 weeks, and the forecast suggests further decline to 0.156. The RSI consistently remains below 50, indicating a bearish momentum, with recent values hovering around 30, signaling oversold conditions. The Bollinger Bands are also contracting, suggesting increasing volatility and a potential for a price breakout. Given this analysis, I recommend a short selling strategy. Enter a short position at 0.178, setting a stop loss at 0.185 to protect against a potential rebound. The initial target price should be 0.16, aiming to capitalize on the anticipated downward trend. To refine this strategy, we will incorporate the RSI and Bollinger Band signals. If the RSI rises above 35 and approaches 40, consider tightening the stop loss to 0.183. If the price touches the lower band of 0.156, and the RSI is below 30, consider setting a second target price at 0.14. This two-tiered target approach allows us to capture significant profits while mitigating risk. The overall portfolio should allocate 60% to this short selling strategy, 30% to a conservative holding strategy, and 10% to a high-risk, high-reward strategy. This diversified approach balances potential returns with risk management. Based on the historical data and forecast, Litecoin exhibits a clear downward trend. The price has been consistently declining from June 9, 2025, to June 22, 2025, and the forecast for June 23, 2025, to June 29, 2025, projects further price drops. The RSI consistently remains below 50, indicating a bearish momentum. I recommend a short position strategy. We will enter a short position at $81.6 with a stop loss placed at $82.8, just above the recent high. The initial target price is set at $78.1, aligning with the forecast price on June 25, 2025. To refine the strategy, we'll incorporate the Bollinger Bands. The price is trading below the lower band, confirming the downward trend. As the price approaches the support level of $78.6, we can consider tightening the stop loss to $79.6. If the price breaks below $78.1, we can adjust the target price to $76.6. This layered approach allows us to manage risk and capitalize on potential downward momentum, aiming for high returns by consistently exiting short positions at predetermined profit levels while protecting against unexpected reversals. Based on the historical data and forecast, PAX Gold shows a slight upward trend with consistent support at $3,380. The RSI consistently remains between 52 and 68, indicating neither strong overbought nor oversold conditions. The Bollinger Bands have been widening slightly, suggesting increasing volatility. Given the forecast predicting prices between $34.10 and $34.60, I recommend a moderately bullish strategy. We will initiate a long position at $3,410, placing a stop-loss order at $3,380 to protect against a potential downturn. Our target price will be $3,460, aiming to capitalize on the predicted upward movement. To refine this strategy, we'll incorporate RSI signals. If the RSI drops below 20, indicating an oversold condition, we'll enter a long position at the lowest price. Conversely, if the RSI exceeds 80, signaling an overbought condition, we'll consider exiting our existing position or shorting PAX Gold. For this particular scenario, given the current RSI around 53, we will stick with the initial strategy. The portfolio will be 60% allocated to this moderately bullish strategy, 20% reserved for RSI-driven trades, and 20% held in cash to manage risk and capitalize on potential opportunities. Based on the historical data and forecast, DeXe demonstrates a clear downtrend. The price has been consistently declining, supported by an RSI consistently below 35, indicating oversold conditions. The forecast for the next week predicts further price decreases, reinforcing the bearish sentiment. The Bollinger Bands are contracting, suggesting increasing volatility and potential for a significant price movement. Given this analysis, I recommend a short position strategy. We will enter a short position at $7.28, coinciding with the first day of the forecast period. To manage risk, we'll place a stop-loss order at $7.81, just above the established support level. Our target price will be $6.78, aligning with the final forecast price for the week. To refine this strategy, we'll incorporate RSI signals. If the RSI rises above 30 and approaches 40, we'll reevaluate the position. However, given the strong downtrend and bearish forecast, the primary strategy remains shorting DeXe. The anticipated profit from this trade is substantial, given the projected price decline. This strategy combines technical indicators and forecast data to maximize potential returns while minimizing risk. The consistent support and resistance levels provide clear boundaries for managing the trade effectively. This is a high-risk, high-reward strategy suitable for experienced investors. Based on the historical data and forecast, Kaia demonstrates a clear upward trend. The price has consistently tested and rebounded from the support level of $0.172, while the resistance level has been gradually increasing. The RSI values have fluctuated but generally remain within a bullish range, with occasional dips below 70. The Bollinger Bands indicate periods of volatility, but the price has largely remained within the bands, suggesting a healthy uptrend. Therefore, I recommend a long position strategy. We will enter a long position at $0.191 on June 23, 2025. The stop loss will be set at $0.183, just below the recent support level, to mitigate potential losses. The initial target price will be $0.201, aligning with the forecast price for June 25, 2025, and the upper Bollinger Band. To refine the strategy, we will incorporate RSI signals. If the RSI dips below 20, oversold, we will consider accumulating more positions. Conversely, if the RSI reaches 80, overbought, we will consider taking partial profits. Given the forecast price of $0.207 on June 29, 2025, we will adjust the final target price to $0.207. This combined strategy leverages the upward trend, support and resistance levels, Bollinger Bands, and RSI signals to maximize potential returns while managing risk effectively. This portfolio is the most efficient strategy because it combines multiple strategies to achieve high returns. Based on the historical data and forecast, Sonic is exhibiting a strong downtrend. The recent price action has consistently moved below the center of the Bollinger Bands, indicating bearish momentum. The RSI consistently remains below 30, confirming the oversold condition. Given the forecast for the next week predicts a continued decline, with prices dropping to $0.198, a short position is recommended. We will enter a short position at $0.271, placing a stop-loss order at $0.274 to protect against a potential reversal. The initial target price is set at $0.247, aligning with the forecast price for June 25, 2025. To refine the strategy, we will incorporate the RSI and Bollinger Band signals. When the RSI dips below 20, indicating an oversold condition, we will reevaluate the short position. If the price touches the bottom of the Bollinger Bands, it suggests a potential bounce. However, given the overall downtrend and bearish forecast, we will maintain the short position. If the price reaches $0.247, we will consider taking partial profits and adjusting the stop-loss to break even. Further price declines will trigger a revised target price of $0.236, and subsequently $0.214, based on the forecast data. This layered approach allows for maximizing returns while managing risk in this volatile market.